Hey everyone, it's Starting Trades here, and today we're going to go over basic charts. I'm not going to get too into detail. I'm just going to go over what charts are showing, especially when more experienced traders share their charts with you. Because as you can see, sometimes there's so many lines and they're all over the place, different colors, and it can get pretty confusing on what you're actually seeing and what you're looking at. So we'll start with some of the basics right off the bat on what you see when you look at a chart. If you're following me and going over yesterday, we went over candles and how they form, what they mean, and the information that you can gain from the candles. So if you've watched that video, you should know what a bullish candle is, a bearish candle, a doji, and what each one signifies within the price action that you see here. Now, other things on the chart that you see here right now, we're looking at Apple. So you have the ticker right here, Apple, AAPL. The closing price, since right now I am after hours, how much it went up for the day, the percent it went up for the day. And then here, the after is the movement that happened after 4 p.m. Eastern in the after hours trading session. So it was down 37 cents or 0.31%. And right below this, you have intervals. So on a chart, you can choose what time interval you want to look at. So this is each bar represents 1 day. Go down, each bar here represents 2 hours. Now when you're looking at this, the darker black is normal trading hours, which is 9:30 to 4 p.m. Eastern time. And the gray is anything after hours and pre-market trading. So you have all these different time frames that you can use all the way down to 1 minute, which is used for scalping most of the time. So we'll go back to the 2 hour. And then on the right hand side here, you have the price axis. On the bottom, you have the time axis. And then right here, these green and red bars, those are your volume bars. Each one of these bars represent how many shares were traded within that particular time frame. So you can look at that as well, and that becomes more important as you go along. So now let's get into some of the mess that happens on charts, and I'm not going to go into too much detail with them. I'm just going to give brief explanations, and maybe later on I'll go into more detail on what each indicator and drawing means. So let's start with the moving average. A moving average essentially is an average of the price over a certain time period. So if you look at edit indicators and you go down to moving average, this is the time periods that you can choose. So length would be 9, 20, or 200, which means how many candles that it's going to be an average of. So obviously if you choose the 9, it's going to take the average of the last 9 candles. 20, average of the last 20 candles. 200, average of the last 200 candles. Now I said I wasn't going to go in depth with detail on what these mean. The great thing about Webull in particular is you can click on introduction here and it gives you a full definition of what the indicator is that you are looking at and how you could use it. This is a great thing to learn about each individual indicator. You can see there are tons of indicators preloaded in here for you to look at, and as a new trader you should really kind of mess with most indicators that you see and see what works for you in particular. So now that we have the moving average, you see that the lines are getting all over the place. They're squiggly. They follow the price average that you see. We'll move on to another indicator. Another popular one is VWAP, and VWAP stands for Volume Weighted Average Price. So it's just what you would think that the name says. It's volume and price weighted together to give you an average, and that's a green line in there. So that's another line that's added. Another popular one is the RSI, which is Relative Strength Index, which gives you basically if it's overbought, oversold based on price and volume. And then another favorite one is the MACD, which is a moving average convergent divergence chart. And it gives you this nice little histogram. But again, it makes these charts look really, really busy. And on top of that, you'll notice these lines are kind of all over the place. And then you have these indicators down here that are making the chart smaller, harder to see. Most traders will then also have their own lines in there. If you have straight horizontal lines left to right, those are most likely going to be what they call support and resistance. And we will definitely have another video in here about support and resistance. And then even from there, there's other lines, trend lines. If you see straight lines on angles like this, these are lines that traders use to create trends. So again, we're getting more and more lines all over here, and it's starting to get messy, and we're just starting. Another thing, Fibonacci retracements. And these, the easiest way to tell Fibonacci retracements is they will have, as you will see in just a second, they will have a stock value and also a percentage value. And people sometimes use these for quick supports and resistance, but also there is an idea behind where a stock hits within your Fibonacci retracements and how they're drawn and how the price will react at those each levels. And then the final drawing that I'm going to go into is just a plain old rectangle. And what the rectangle usually signifies is usually they are like supply and demand areas, and they look kind of like that. So these aren't in the right places. I didn't put any lines in the right place. I was just kind of filling them in to show you what a chart could essentially look like. Now, when you take that all into account, that makes the charts look really messy, right? And it can be really confusing. So the best thing is to kind of take your time and use charts yourself and get used to what each line is and where it is and how it reacts. I'm going to take off a lot of these and then see how, just throw in what a couple of regular ones look like and make it a little more cleaned up, what a minimalist chart might look like. So a minimalist chart, you'll see things like support and resistance, which will be your horizontal lines again, like this. You'll see trend lines. Wrong one. And this will look like this. Like that. And they can be all different shapes, sizes, styles. Then you will most likely see indicators. You'll probably see a VWAP and a moving average. And then that's pretty much what your minimum chart will look like for the most part. Mine in particular will then have some Fibonacci retracements in there as well. So it's still messy, but if you take your time to learn and understand what each would probably look like, so keep in mind Fibonacci retracements will have their percentage tied to them, so that's an easy way to pull that one out. Horizontal left to right straight lines are most likely going to be support and resistance lines. Any straight lines that might be on angles, they can also go up and down like that, steeper, anything like that. Those will be trend lines. And then your indicators, the lines that kind of file along with the stock or squiggly, those are going to be your moving average mostly. And then that really wraps it up for that particular section. If you have any questions, feel free to drop them in the comments. Hit me up on Twitter, Starting Trades. And yeah, happy trading to everyone. Remember, green over greed.